All right, so as we can see throughout this week, we of course only traded one pair being the euro dollar. We actually took 3 trades in total. And what do we see? We actually managed to net 11.35% and we actually have a 100% win rate. Now, what is going on, traders? This video has been long overdue. A while ago, I uploaded some ICT silver bullet videos based on some information that some of the common YouTube gurus actually put out there. They basically claimed that for the ICT silver bullet strategy, you would wait for liquidity to be taken out before 10-11, and then you would basically take a trade in the opposite direction. And all I basically showcased is that within Forex, if you use this exact strategy, you will not be profitable. You will not be making successful results. I posted some videos where I did like 10 to 20 backtests and the results were kind of bad. And the reason for it is that because from 10 till 11, we are going to go hunt liquidity, which is something pretty common to me because I did do some price and time studies. And I think every trader who wants to be successful should do that. But these videos, they basically got misinterpreted. Everyone was saying you are doing it wrong, which in the beginning and in the middle and at the end of the video, I actually highlighted, but there was so much hate on these videos. People were talking really bad trash. And now a couple of weeks later, where we also have the video from ICT explaining exactly how the ICT silver bullet strategy works, I will be showcasing you how I trade the silver bullet strategy, how I do my backtesting on it, and I will be using the explanations that ICT gives me. And indeed, the silver bullet strategy can be pretty lucrative if you adapt good risk management and still use some of the common ICT techniques. So in this video, I will be backtesting the week from Monday, the 29th of May. And the 29th of May was actually a bank holiday, so the price actions won't be as good, but I am going to showcase it anyway. During this week, I did not actually take any trades on the euro dollar. I am not a big brain maniac, so I have no idea what the price action did on these days. I do kind of know the direction, but I will just be showcasing and taking trades based off of what I see, and I will give you a full explanation so that you can also implement the silver bullet strategy in your own trading and do your own backtesting and data collection on it. So the rules are pretty simple. Let me actually write them down real quick. All right, so on screen, we can actually see the rules here. So these are the rules I use. And of course, I will be going over additional confluences. My confluences are basically built upon all of the ICT teachings and also some teachings that I do in my own course. But the base rules are basically going to be, we are going to be entering a position between 10 and 11 a.m. New York time. We are going to locate liquidity. We are going to target that liquidity. So we are not going to be waiting for that liquidity to be taken out. We're actually going to be looking to target that specific liquidity. Our entry will be on a clear FEG after we have some displacement towards that liquidity. Our target is going to be at least 15 pips. If we cannot target 15 pips, we rather not trade. This is something that can be black and white. So I might in this video take some trades for less than 15 pips because what I'm going to showcase is that you can actually find a trade almost every day with this specific strategy. And then I do encourage everyone to actually be taking partials. When taking partials, you will secure some money. You can move your stop to break even. You might not win as much or as the potential of the strategy is, but for mental endurance and for beginners, especially psychologically, having more wins than losses is going to be much more lucrative. So that's something that I'm also going to be preaching throughout this video. So for now, let's actually move. We are on FX replay, by the way. There is no way to actually cheat in this program. You enter positions, you exit positions. That's what I will be focusing on right now. So let's actually get over to the 10 to 11 a.m. session in New York, and then we will be taking some trades there. We are currently on the euro US dollar, by the way. All right, so as you can see, we just approached 10 a.m. right here. And of course, to actually spot liquidity, we will need to move down to the 15-minute chart. The newest liquidity that I am spotting where price is displacing towards is going to be the liquidity at this point right here, which is liquidity from the New York session from the previous day, so from Friday. And that's going to be a clear target. But again, if you look at the price action, it is a bank holiday. So I do not expect that to be taken out per se. I will just be looking probably for a 1-to-1 R trade. And if we see I skipped a little bit too far here. What do we see right here? We see that we are breaking market structure. We break market structure right here. We also break market structure right here. And what do we react to? We react to these fair value gaps, as you can see. And we create a new fair value gap, which we just tapped into. So what we can see is that we basically just missed this trade. What I'm going to be doing is waiting for a new FEG to form to then catch a continuation trade. And I will be satisfied with about 1 to 1R, something along those lines, especially because the momentum is quite dead at the moment. All right, so what do we see? We see that we actually break structure to the downside. So now a lot of people, especially if we have such clean structure, they will be using OTE, right? And if we actually look around the OTE levels, we can see that we have a small fair value gap formed right here, which is where I'm going to take my trade off of. Again, anticipating that price is probably willing to go lower. So that's also the play that we are going to be making. We are going to be targeting that lower liquidity. All right, so let's actually place that order and see if we can actually get filled. So what we will be covering is I'm going to cover this high plus the gap that we have left, because we still have a bit of unmitigated FEG left. So I would be okay with price actually tapping into that high. And then as for our target, I'm going to be targeting whatever low that we put in here, hoping to catch some kind of a continuation. I will be risking 1% on the trade. So let's see if we get filled. It seems like we do get filled, and my TP is at a place that I do agree with. So let's see what happens. We actually have a winning trade here. So to quickly recap this trade, we knew where the liquidity was. We were following the displacement from the higher time frame, hoping that price would go to this liquidity point right here. Keeping in mind that it is a bank holiday, that price action is relatively slow, and we do not have to expect a, let's see what it is, a 6R trade right here. I am more than happy with what we just closed, which was I think I closed it here, which was a nice 2R trade. Exactly, so we just made 2% on this specific day. And this is going to be the only trade that I'm going to be taking today. Tomorrow, so on the Tuesday, I will be a bit more aggressive, especially because at that point it is no longer a bank holiday and we can actually start targeting those actual 15 pips. So let's actually move on to that next day. All right, as you can see, we are just before 10 a.m. right here. And if we take a look at the bigger picture, let's actually zoom out to the 15-minute. What do we see? If we look to the left, we can actually see that we took out liquidity right here, and we had a pretty strong reaction to that. What did we leave behind? We left behind this low, which I am going to anticipate is a weak low. So therefore, my liquidity target would be right there. And further than that, I do not really need to look, because I think that will definitely fulfill my 15 pip potential. Let's actually take a look. If we look at price right here, I think all of the FEGs already got mitigated. So we are going to be waiting for a nice FEG to actually set up right here. And once we see one forming, then we can actually take a trade off of that. In this case, I want to be able to target at least 15 pips. So my trade would be somewhere above this area right here, which is also above equilibrium. So let me quickly draw that out. Equilibrium would be where price is right now. So if I'm going to be catching a trade towards this liquidity, a continuation trade, then I will be looking to enter the trade above our equilibrium level. So let's see what price actually provides us. Right here, I'm not going to enter just because we are near equilibrium. What we can see is that price basically induced more liquidity here. So what I marked on the downside here is going to be that liquidity that I wanted to target. What we did here is we induced more liquidity, right? Because these orders are still intact. And now we created more orders or stop losses or entries right here, which is good. So what we can assume now is that there is going to be liquidity taken out somewhere over here. And once we take out that liquidity, we are probably going to fuel a move down. So this is the strongest liquidity that I see here right now. What we could potentially do is catch a long from there to there. But overall, I think we are in quite a premium if we look at the higher time frame, right? So I would mainly be looking for shorts here. That's going to be the play. If we look to the left right here, what do we see? We can actually see that we have a nice little order block right here. So let's also mark that out. I would like to see that respected. And then if we look up here, we also have this small fair value gap, this one, which we could also look at. And let's actually just mark out right here our EQ and remove our FIB tool just to keep the chart a little bit more clean. So let's see what happens. Seems like price is, we just tapped into that order block right here. So it seems like price might push through it. Now we have two nice wick rejections. So we can assume that price might just be going lower. right now, what do we see? We see a market structure shift. And if we think back about the ICT 2022 mentorship, we actually have our entry model here. We have a sweep of liquidity. We have a sweep all of these highs right here. And we also have a sweep of this that we just created plus the market structure shift. So looking at this price action, I would love to catch a short from the FEG right here. We'll be covering the high. And as for our target, we're going to try and target these lows here. And as you can see, this is going to come down to about 15 pips. So let's see if we can get filled or not. Seems like we do not get filled. In this case, what we could do is look at this little pivot that we created right here as a nice reaction to a breaker block that we have. So we can assume that this is not going to be broken. And as you can see, we are starting to displace to the downside quite nicely. So I would like to place my final order looking something like this. And in this case, we can assume that the liquidity is going to be swept by some pips. So let's add 3 pips to that to actually get our 15 pip target right here. And let's see if we can get filled on this trade or not. And it seems like price is going to just take off without us, which is completely fine. Right now it is after 11 anyway, so we cannot enter any more trades. But as you can see, the ID is starting to work out. Let's see. Yes, as you can see, price actually took out that low and also hit our TP that we would have set for ourselves. Unfortunately, no trades on this day. So let's continue to the next day. And let me just set these rules over here. All right, so we are almost 10 a.m. here. Let's actually start mapping out the liquidity that we have on the chart. If we take a closer look at the 15-minute, what we just did is we took out liquidity right here. We are quite bearish overall. We left out a low right here. And if we just follow market structure, we can assume that this low is a weak low. So again, this is just based on market structure, and I would be targeting this low as my point of liquidity. Zooming out, we do not really see anything else on the chart on the left, on the 15-minute at least. I'm not going to go higher than the 15-minute in this video. If we now draw out our PDZ array, we can see that we are in a premium, so we could be looking for shorts to target this low right here. Let's actually see if we get an entry opportunity. So what do we see? We see that price is really shooting down here. We now have an FEG form, which is quite nice. So what I would like to do is I would like to enter off of this FEG. I just used my FIB tool to highlight the 50% level here. And I'm going to place a short right at the 50% level. I will cover the high right here. And then for our target, we know what we want to target, at least 15 pips. And our ultimate target will be this low right here. So let's actually see if we get filled on this trade or not. Place order for 1% risk. And as we can see, price already moved down here, but we just tapped into that liquidity. For me, a liquidity sweep should be a little bit lower than this. This for me is just an inducement of liquidity, right? We just created 2 relative equal lows. So what I will do, looking at the chart right here, I'm not going to take an entry off of any of these FEGs that we see on the left here, mainly because they are in quite a discounted zone. If I wanted to enter this trade, it would still be at this FEG, hoping that we would come back down to actually grab that induced liquidity that we just left behind here. If we do, however, push lower than this, I will be removing my order and I will no longer be interested in a trade. Let's see what price does here. It seems like it's coming back. And as we can see, it just missed us. So we just didn't get filled. And this is something that happens in the real market quite often as well. So we didn't get filled here. So no trade for this day. And it seems like we are at 11 again. But again, the idea of the trade was right. So if we would have taken the trade like this, we would have been able to get 1.8 R out of the trade, which is not bad. But no coulda, woulda, shoulda here. Let's just move on to the next day and see what we can get there, which is already going to be Thursday. All right, so we are approaching the silver bullet zone again. Let's actually zoom out a little bit and see where price is likely heading to. So as we can see, we are clearly bullish, making really strong higher highs and higher lows. So what I am assuming is that we are going to probably be taking some liquidity on the buy side. And if we take a look, there is liquidity right here that we can target. And even higher up, there is more liquidity right here, which I think we can for sure actually take out of the market. So let's hop down to the 1 minute and see if we can find an entry here. What I can actually immediately see is that we swept liquidity here with this little wick. Well, I am basically assuming that this is going to be a pretty strong order block that we created. I'm going to mark out this whole thing. And this is something where I do not want to see price pull below. If we do, I am expecting that we are likely going to take out some more sell side liquidity before continuing higher, mainly because we took out liquidity from the sell side right here. So if we go lower than that, there was probably not enough liquidity right there to fuel a move up. As for now, what I will be doing is I will be using my FIB tool right here to establish a fair value gap in that discounted zone. And we have one right here, as we can see. This is a fair value gap in a discounted zone. We can smack a long position on this trade. I'm going to cover the low of that order block that we created, because again, I do not want to be part of the trade if we actually violate that. And I'm going to target my 15 pips, which would be around right here. But let's actually try and capture that liquidity, target that, hoping that that will be taken out of the market. And now all we have to do is wait and see if we actually get filled. So it seems like the first bit of liquidity already got taken out. We are now starting to push down. And if we take a closer look, this fair value gap already got mitigated. So we're not taking a trade off of that. Now we are getting filled in our little discounted FEG that we created, and we react to it quite nicely. As you can see, that order block that I marked right here is holding up quite nicely so far. And it seems like we are starting to push up. Now I'm starting to get a little concerned just because price is tapping into that order block quite a couple of times. And what does that basically mean? This means that we are inducing more liquidity. So we are now inducing liquidity on the sell side. If I do notice that price is going to come back to that a couple more times, I am going to close my position, being at break even or at a small loss. So if this big displacement candle right here is not going to be our move up, I'm going to exit the position. And as we can see, we just broke out of it. Now at this point, I really do not want to see price come back. So what I'm going to do is I'm going to manage my stop loss just below the lows that we created here. And if we do come back, I want to be out of the position because we are likely going to go for more sell side liquidity, or at least the sell side liquidity that I drew out right here. But I do not want to be in drawdown for that. So let's see what actually happens here. It seems like we are starting to push up quite nicely. We have a pretty strong push down, but a really strong V-shaped recovery. So what we can assume is that we just wanted to get some of that imbalance rebalanced. You could argue that you have a re-entry possibility right here, but what are the rules? The rules are pretty simple. We are only going to take trades between 10 and 11. And as you can see, we are right here. At the moment, we are 11.22. So we are not allowed to take any more trades. And as you can see, our trade got filled quite nicely and quite quickly. So right now we are up about 6.6% or 6.6 R. That's really nice. And I think we haven't lost a single trade yet. So that's pretty good. All right, so let's actually move on to the next day and see what the Friday is going to be bringing us. All right, if we take a look at price and what we are starting to do, we noticed that we were quite rangy during Asian session, no surprise there, but then also pretty rangy through London session. And we noticed that we actually took out the buy side liquidity that we had from the Asian session and from midnight. We took that out in London and then started to slowly work our way down. We then have the sweep of liquidity of the lows from the Asian session right here. And it seems like this wasn't really a sweep, but it is going to rather be a continuation, because if we take a closer look and think about it, if the true purpose was to just sweep liquidity, which we did right here, then price would have no reason to actually come back with this leg, or at least that's how I look at it. So if I think about liquidity and I see something like this, I see liquidity building up and I see a move lower followed by a move up. For me, there is no way that price is actually going to do something like this, because if it does that, then this was not a sweep of liquidity, but this was a valid break of structure and our market structure actually shifted. So for me, this was not a sweep of liquidity, but a market structure shift, especially because we shifted right through those imbalances. So my bias is going to be bearish for sure. So let's actually start looking to the left here and see what we could target for liquidity. So the first point that we could mark is basically where we marked our sell side liquidity yesterday, where we started to induce liquidity, the point where I moved my stop to break even. Actually get rid of this drawing. This could be a first initial target. We also have a next target right here. And then our extreme and external target would be the lows from London from yesterday. Let's see what we could play with here. All right, looking at price action, we had a really strong push lower here already. And if I take a closer look, and this is something that I talk about in the course as well, what we notice is that we have an order block here, and this order block actually rebalanced price. So what we see is that this order block tapped into a fair value gap and then powered a really high momentum continuation to the downside. So for me, that would be a point where I would consider placing my stop loss above, because this order block swept liquidity, mitigated imbalance, and then started to push on lower. So what I would like to see now is a retest of that order block, confirming that this order block is actually going to hold, then a continuation with displacement for me to then take an entry off of the fair value gap that we marked, or that gets formed, and then we will basically anticipate that move lower. So that's going to be my play here. I'm not sure if it's going to come, but let's see. So we tap into that order block, and it seems like we are rejecting it. And now we have that fair value gap right here. And if you notice this candle right here with the wicks on both ends, right? So we basically tried to push price higher, we got rejected. And then basically what this is right here on the lower time frames would be something like this, right? These candles right here. So to me, that is a valid market structure shift as well, which is also an additional confluence. So what I will be doing is I will place my short right here. I will be covering the high of this candle, anticipating that price will not come back. And if it does, I'm no longer interested in the position. And then for my target, I'm going to likely target the nearest major liquidity right here. And that's going to possibly provide us with 4.7 R. Now for partials, that's something that I was preaching in the beginning. You could aim for something like this, right? So the liquidity from that New York session that we left behind. That could be a potential partial for you. I will, however, just be looking at how price is going to be delivering and see from there. All right, so we placed our order for 1% risk. We immediately get filled, and let's see what price does. I want to see a reaction now, or I might get out of the position. But as you can see, we do get quite a strong bit of displacement to the downside. All right, even more displacement to the downside. And now you could have potentially taken off partials right here, which I will not be doing given the momentum that we are seeing in the market. And now I'm pretty sure that on the next candle, we will likely already be hitting our TP. Okay, so price decides to actually pull back a little. I don't want to see it pull back too much. So what I will allow is for price to actually rebalance this fair value gap, but then I really want to see it push lower. I would not like to see it break above these this small order block that we created right here. Otherwise, I might close partials there. It's like price is reacting quite nicely, and it seems like our TP already got hit. But for the sake, let's actually, because on some brokers you might not be filled right there, and now in this case you definitely got filled. So this was our trade, 4.7R, and this was only trading the silver bullet. I think it is Friday now. Yes. So yeah, that was it. That was this video, or at least that was this week, and we managed to make 11.353R, which is pretty nice. Let's actually hop to the analysis for the trading session that we had and look at some statistics. All right, so as we can see throughout this week, we of course only traded one pair, being the euro dollar. We actually took 3 trades in total. And what do we see? We actually managed to net 11.35%, and we actually have a 100% win rate. Now, that's quite amazing, to be honest. Our average RR was 3.78%. Our highest RR was 4.7%. The ideal RR, or something that we could have captured most of the times, would be 6.3. And the max that we could target would have been 11.27. In these 3 trades, we could actually average around 6.3R instead of what we averaged around here. So that's pretty good to know. Our average trade duration is around 50 minutes. As we can see, we took trades on Monday, Thursday, Friday, and that's about it. So these are the stats. Pretty nice, pretty decent. I hope you guys found value in this video. If you did, make sure to leave a like. A subscribe would be greatly appreciated. And if you have any questions, feel free to leave them in the comments, or you could also join the free Discord server that I provide. The link will be in the description, and you can ask any question right there. There are a lot of like-minded traders in there. We are really active every single day. So if you're looking for a nice and fun trading community, feel free to join there. All right, guys, thank you so much for watching, and I will catch you in the next video. Bye-bye.